All right, welcome everyone to Ready for the Bell Trading. My name is Kevin. Um, I'm very much excited about this particular session because we are going to talk about um, pivoting and shifting in the markets and how we can take advantage of different instruments. So it's been a wild ride since the elections, right? It's been interesting. The elections are over, so now what? What can we expect from the market going forward? Um, I can tell you right now that things seem to be bullish and bearish, which brings a heightened level of volatility, a lot of uncertainty, right? So, let's just go through a couple of things here. And if you guys have any questions or anything that you want to look at, make sure to be firing away that in the chat, and I'll keep my eye posted on that. But let's go ahead and start with just the S&P. We saw this Pfizer announcement, and early in the trading session on Monday, I talked a great deal about this. Early in the trading session on Monday, I was watching this, and it was just cascading to all-time highs. And look what happened. This was a bearish indication that this candlestick closing below this resistance level, right? And I'm bringing this up because it stalled just like I said it would. And I said, this is bearish. We need to see a little bit more confirmation. We actually got it right here. We needed to see this candlestick close below this candlestick, and it did that. Then the preceding day, it kind of came up a little bit. Now it's back down. So this is actually not very bullish. This is not good. But I don't want to give you the impression of doom and gloom. That does not mean I think that the market's ready for a nice big sell-off. I certainly don't think that. I definitely don't think that we're going to just boom straight down. Certainly not. But it's not bullish. Could we see the market start to do this stuff right here? Absolutely. But for it to stall out at this high right here, that's a leading indicator that the market's unsure. We are uncertain. Volatility is high, and it does not know what it wants to do right now. We've had an incredible year, both bullish and bearish, right? When you see these kind of sell-offs right here, this is an indication that markets are experiencing finally some rebuttal, some breathing, some exhaling from the just endless bullishness from the last several years, right? We finally get that sell-off. We have seen nothing but rising. We had that big V movement that everybody talked about. I was talking to a woman that I'm telling you right now, she's a dog sitter. And she goes, I know, like the big V movement. When you have the dog sitters saying, I know what the V movement is, that's a clear indication that this is extraordinary. This has never been seen before. If everybody knows what the V movement is, it's because it's never been seen before. And now it's starting to stall out a little bit. We're getting a double top formation in a way, and then it came back up, and I thought for sure that this was going to break our double top. And double top means that we've got a high, comes back down, another high, comes back down, and boom, breaking that second top, right? It didn't. Doesn't mean it still can't, but it didn't. Typically, when you see a burst like this, you want to see it come up, maybe scale a little back down, and then make its move, right? You don't want to see it hit that top right on the head and bounce right off of it. That's not a good indication that we are on the rise. So what does that mean? You know, what does that mean for stocks? What does that mean for the NASDAQ? The NASDAQ was even worse on Monday. It just completely bounced off of this. It rejected it 100%, like a really bad pickup line, right? So, and this was a great example of a bearish indicator. This candlestick right here closing so far below where it opens, and then closing even further down here, almost attempting to close this gap right here, but officially closing it right here. That's bearish. Now we had to rise up again, but still we're getting stuck. So the market's starting to rethink, are we bullish right now? Do we like what's going on? We don't know what's going on in many different cases here. That's what all this is telling me. The Russell is still going gangbusters. I've been saying this for a while, that the Russell 2000 is a great leading indicator of the overall market. And we had a close above the all-time high here of 1700, 1710 roughly. And we had a close above that. But ultimately, this is just an indicator to try and gauge what the overall market is. This is still mid-cap, and mid-caps do not dictate what overall markets are going to do. They don't. So even though the Russell is doing well, and it's a good indication that we still could see strength to come, we're not. We're getting stuck in the NASDAQ. We're getting stuck in tech. We're getting stuck in the overall market. So we're starting to dry up a little bit. I'm not saying that I don't think the market's going to continue to run. I just think that it's breathing right now. I think that it's not sure what it's going to do, and volatility is starting to pick up. So looking at the volatility index here, it's back down in this lower quadrant here. And this is a good indication that markets are more bullish, but at the same time, it just got down here. And just because this is down here, you guys, let's try and understand what the VIX is. The VIX is only to determine what markets, when markets are at their most volatile, and when they're beginning to simmer down, to quiet, to start maybe making their bullish runs, their steady movements up. So it just shot up and then shot back down. Now that it's down here, now that it's trading in this area, that does not mean, okay, yep, markets are going to start going up again. It means that we are having a roller coaster ride. We don't know what's going to happen. What we need to see happen with the VIX in order to tell us that things are good to go, we need to see some of this. We need to see it trade down here for a while. That's what we're looking for. It just got down here. I have no inclination that we could easily see it again, right? So keep your eye on the VIX. We want to know what's going on. This area right here, the blue area, getting above here just tells me that more volatility is to come. Staying down here for a consistent period of time tells me volatility is starting to simmer. So we're just now getting down here. We want to see it stay down here before we start to say, okay, things are starting to figure themselves out, clearing up. What does it mean though when you see volatility in this up and down state going back and forth? What does it mean for the market? And if you know what it means, definitely throw it into the chat box there. But when I see this, I see that stocks and options, specifically options, are going to be tough plays, extremely tough. When we have high volatility and we have uncertainty, it's not good for trading stocks. We need to see consistent movement. I don't believe in trading things bearish because stocks overall, they want to go up. That doesn't mean that playing a bearish trade on a stock isn't a good idea. I just don't like doing it because I know that ultimately stocks want to go up, right? And I've said this before. So knowing that stocks may be faltering and starting to rethink what their trajectory is, what their posture is, it makes trading options specifically very difficult. And one of the things that, well, the biggest thing I wanted to talk to you about today was, how do we shift? How do we be strategic and make that shift in the market? What's the next opportunity? How do we capitalize on the next opportunity? Are we just going to wait until we see this thing start just trending down here, which ultimately will probably, not essentially, but probably mean that this is starting to make us move up? Are we going to wait for that? Absolutely not, because I don't personally want to sit on my hands. That's not why you guys are here. You got the reason that you guys are members of this group, and the reason I'm here to help you is because we don't want to sit on our hands and just buy stocks, ETFs, mutual funds, and just let it go up. You can hire an investment advisor to do that, and you can make a decent profit over a 20, 30-year time period, right? We're here to take advantage of every opportunity there is. So today we're going to be talking about the different instruments. And I focus on this in the group consistently, but many of you know a lot about stocks and options. And some of you don't know a lot about stocks and options. Some of you may know about forex outside of what I've been discussing so far, and many of you don't know about it. So that's what we're going to be talking about today. And those that know a lot about forex, then hopefully some of the things I'll talk about will help. But for most of you, this is going to be a great opportunity to learn about currencies. That is the instrument that we want to be using. We want to be shifting in how we're thinking. So if stocks and volatility are no good for options, if volatility is no good for stocks and options, it is 100% very good for the currency market, or forex, foreign exchange. So the first thing I do is I think of, well, if the market's going down, the dollar typically is going up. And if the market is going up, the dollar is typically going down. So why do I think that we should start focusing more on currencies while there's an uncertain period going on? Well, right here. Okay, this is the dollar currency index, right? It measures what the dollar is doing, right? This price is basically what an actual dollar is worth in comparison to the overall market. Okay, so basically it's saying it's worth 92.97. We're going to talk about pairs in a second. So putting that to the side, these 2 points right here and here, this is a big deal because this was back in September. This is when we saw all that volatility, but this is back here from July to August when the market was just on a tear, right? It was going up and up and up and up, retracing back to those old previous highs. And then it started to stall out. And then back in September, we had that big sell-off in the market and the dollar improves, right? Well, we just had that rally again in the market, but we had that a few days ago. And a few days ago, it was going up, but the dollar was going up, right? So it's supposed to be an inverse correlation, right? So what we're looking for is we want the S&P to be trending up, 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 up. And the greenback, the dollar, if the S&P is going up, up, and up, and up, we want to be inversely correlated, right? If it's going up, it should be going down. So right now, the market has been showing that it's going up, kinda, but this has been clearly showing that it's going up as well. So that correlation is broken. There's a clear indication here that the dollar is giving us a sign that, yeah, I don't really think that the market's bullish. I don't think so. I'm not really feeling the need to become more devalued. In fact, this area right here, let's go and clear these drawings. This area right here hasn't been touched for a long time, a very, very long time. So in order for us to really get a break or another rally in the market, we want to see this level get broken. Came back over to here, wouldn't break it. That does not mean that we're not going to see more gains in the market. It just means that if the correlation is inverse, then we should see this go down when the market goes down. It's not going down, guys. It's struggling to break this. So that just means that the market doesn't know what it wants. It's highly volatile. It's difficult to trade options right now. The fun thing about Forex, the thing that I love about currencies, and guys, first off, I've been trading currencies for almost 14 years now, going on 14 years. And I love that market with a passion because of a couple things. One, it's actually not that hard. There's not very many complexities in terms of strategies. Options have so many different strategies to them. I can think of 100 off the top of my hand. Selling puts, selling calls, buying puts, buying calls, doing them at the same time, using calendars, different time frames, doing straddles, doing iron condors. I mean, all the names that I'm saying right now, they're real names. There's real strategies. I didn't make them up. It's a real thing. And there are so many different strategies. And Forex, the beauty of it is there are no strategies. There are no endless strategies. There are strategies, of course. But here's the biggest thing. Options, there is time. When you buy something, you're buying a specific contract, right? So for instance, I'm going to bring up Thinkorswim chart here. And this is Caesars. Okay, and that was the stock that Tony was interested in. Let's just bring up Apple. Okay. Here's our ladders, right? If I want to, obviously it's a 12, so I wouldn't even think about buying this. But all these right here demonstrate time. The 27th of November, the 4th of December, the 24th of December, the 16th of April, the 21st of January of 2022, etc. Right? So, so all these have a time expiration to it, right? Currencies do not. You buy and you sell and you get out when you want. There is no kicking you out. There is only buying and selling. There is no buying for long, selling for short, buying for short, selling for long, buying puts for long, selling puts for or buying puts for short, selling puts for long, etc. That's another beauty of currencies. Now, I'm not trying to sell you on trading currencies over stocks. What I'm trying to demonstrate here is that the market's shifting. It's hard to trade options right now. So we want to shift over to a different instrument so we can make as much money as possible in any environment. And right now, that's currencies, you guys. Not trading currencies right now is a huge missed opportunity. You must be trading currencies. So let's go over the basics. Let's go over a couple of different trades that I actually want to take there, and let's talk about a couple of the trades that I've taken in the group. Give me 1 second here. Gosh, throat's parched, guys. Sorry about that. Okay, so when I'm talking about, hello, there we go. When I'm talking about currencies, this is going to be great for those who are brand new, and forgive me if you're already used to this, but we'll get into the trade soon. I've talked about this before, but I want to really make sure we understand this. The euro dollar, it's the most actively traded pair in all of currency. When we look at stocks, Apple is the most actively traded stock in the world. Just for today, for example, 103 million shares were traded, right? Just today. That's the most active. Today, in the currency market, $5 trillion was exchanged. Okay, think about that number, 5 trillion. That's a staggering number. And the reason it's the most actively traded, highest volume instrument out there is because it's always trading. Apple will only trade between 9:30 Eastern to 4 p.m. Eastern. Okay, 9:30 a.m. to 4 p.m. The currency market is trading 24 hours a day. It never stops trading. And it goes from US banks trading them, huge, massive conglomerate institutions, bank institutions from the US to Asia, to Australia, to Great Britain, to Germany, all over, right? Everybody is constantly trading this, and they're trading billions and trillions of dollars a day, right? So the volume on this is very good for us to be making money, whether it's going down or up. So let's make sure we understand the euro dollar, European currency versus United States currency. When we look at this, right now it's basically a versus thing. So what does this mean right here? Well, anytime you have the latter currency pair, okay, let's zoom in. Oh, goodness. Make sure, hopefully you guys can see that. Okay. Where was it? My little annotation tool. Here we go. Euro dollar. If we put a little slash right there, this currency right here represents this number right here. So right now, well, not right this second, but this price level, according to this area, this line, is 1.1623. Okay, that's how many dollars it would take to buy 1 euro. So anytime you're looking at this, whether it be the euro dollar, clear this, euro dollar, or the Australian yen, on the Australian yen, it takes 72.53 to buy 1 Australian dollar. Okay, so the Australian dollar is worth a heck of a lot more than the Japanese yen. And on the euro USD, currently it's trading at 1.18. So we lose 18 cents to our cash, right? To a euro to a euro. Okay, so that's what, when every time you look at this, a pair, that's what that means. Okay, the price is referencing what the latter part of the two symbols here is representing, the latter part of what it takes to buy one of these. So let's go back to the Australian yen for a second. One of the other reasons I like looking at currency pairs is there are, gosh, I think there's roughly about 20, 30 pairs that we can trade overall. There's yen pairs, Australian, US dollar, euro. I'll go through some of them, but I'm not going to get too deep in it. There's roughly about 30. Whereas in stocks, there are thousands upon thousands upon thousands of stocks, right? So there are stock screeners out there that you have to use, so you know which ones that you want to be looking at, right? In currencies, you don't need that. There's only 30. So the only thing you need to think about is which one is presenting the best opportunity. Excuse me. Sorry about that. So, so that's the plus side, right? Instead of having to think, okay, which stock should I be looking at right now? My portfolio has only a certain amount of margin in it, so I can only take so many trades. Which one should I do? And so on and so forth. Well, rather than having thousands of different choices and then having to use a screener and this and that, we can go through 30 in less than an hour, right? We can breeze through them. So which one should we look at? Well, I still like to look at things that are correlated to what the market's doing, stock market, because I'm trading stocks, I'm trading options. This is just another instrument for me to be making money. So I'm looking at the Australian yen right now because it's extremely correlated to the S&P 500. Okay. So if I look at this, there are no different endless strategies of should I buy the December 4ths or the 75 calls, or should I buy the 74 call? No, none of that exists. None of it. This is non-optionable. It's buy at 75, sell it at 74. Hopefully it goes down. Great. Buy it back here. Hopefully it goes up. Great. Sell it back here. That's it. Pretty simple, right? So that's kind of it's a great aspect to it, but that doesn't mean that currencies are easy in terms of just they make tons of money. In fact, it's very difficult to make lots of money on this. But you don't have to think about endless strategies. You can just think, okay, what's my posture? So that's why I brought up the Australian yen. Is the Aussie dollar, Australian dollar, is very much correlated to what the S&P is going to do. So if the S&P is up, the Australian dollar will be up. Just a little familiar, right? Okay, it's been up and up and up and up. Up and up and up and up, right? Now it's going down a little bit. Mark's going down a little bit. So it's correlated, right? One of the reasons it's correlated is because of, let's go ahead and bring up a text box. UD equals S and P. Now, this is not literal, just trying to give you an idea of how to gauge these things. JPY equals risk versus safety. Anyways, so the Japanese yen has always been our safe haven. So when the market is selling off, the Japanese yen is gaining in strength. So you can look at it that way. When this is going down, this is going up in strength, because traders, giant institutional banks, are not thrilled what's going on with their options, because all of a sudden they look at their options and they're like, okay, my spreads right now are not very favorable. I'm looking for, excuse me, I'm looking for maybe 5 cents, roughly, a spread. Now it's jumped up to 10. Sometimes you'll see a spread from 11 cents to $1, right? The bid and ask. So 11 cents to $1. But let's not get tied up in that. That's when I know the volatility is crazy. And that's what traders are doing. Those big institutional banks, they're dumping everything into the yen because it's a safe haven. You know, it's all about what their reserve is. So they have a zero interest rate reserve, so they know that it's safe. It's like buying U.S. Treasury bonds, but way more liquid. Otherwise, they'd buy U.S. Treasury bonds. So they jump into Japanese yen, or they also jump into the Swiss franc, which I talked about on Monday. So they jump into this one because it's safe, and that's what's happening right now, because the market is uncertain. They don't know what's going on. So we look at a pair like the Australian Japanese yen to figure out maybe there's an opportunity here with the market. I look at this pair, I'll look at all pairs. I'll look at all pairs, but I'll look at this pair to see what's going on with the market. And can I make a buck on what's happening here in conjunction with the market? Can I do that? That's one of the reasons I'll look at this pair first, is because of that correlation. Australian dollar, okay, write this one down in your notes. Okay, Aussie is tied. Aussie is, well, correlated. Aussie is tightly correlated to S&P. Is attached to risk versus safety. Okay, so definitely make sure you understand that. That's the way we know market's up, this is strengthening. Market's down, this is weakening. We have an opportunity. We don't care which way this goes, right? But now I see an opportunity. So this is the part about forex. This is that makes it so much more intriguing in terms of not feeling like you need to know whether or not the market is too volatile or any of this and that. All you need to know is have a bias of general risk versus risk versus flight versus safety, so on and so forth. And then once you kind of have an idea, then you just need to look for patterns. You need to look at the charts. You need to look at your indicators and see where the opportunity is. And that's what we do with these currency pairs. So I wanted to look at a couple of different trades. And this is a trade that we're going to be taking. Now, this is a daily chart, right? We were looking at this to break this level. The market just shot up. Elections were over. Traders loved what was happening, broke right through this resistance area and started shooting up. If it had come back up to this level and broke through it, I would have been bullish on this pair. But I'm still bearish on this because I think the market's starting to stall out. And we had some leading indicators that I showed in the last class, and I'll bring them up again. 1 and 2. Ooh. Oh, come on. There we go. Our missed pivots, right? I talked about this in one of our sessions. If you didn't get a chance to watch that, it's in the group chat, I think from last week. Anyways, we missed 2 of our pivots here. They never got touched. You can see that right there. Never got hit by this price action, never got touched by these candlesticks. It's been a long time, right? So my bias was to sell this down. Well, broke through this, and now I was waiting. Well, I'm seeing an opportunity right now, and it's a little bit more shorter term. And that is one of the beauties of currency trading, is not having to sit in front of your charts all day, as most of us can't do that, right? But I personally, I hate short-term trading. I used to do it for the longest time. I loathe it. Just sitting in front of this chart hour by hour. You know, this represents 1 hour. Oh my gosh. Some guys will watch this by seconds. Oh, well, we can't watch by seconds, but I'm glad. But some guys watch this by the minute. Each one of these little suckers represents a minute. Can you imagine watching this every minute, watching a new one take place? You know, let's just go ahead and sit here while another one takes place. No, I'm kidding. We're not going to do that. But I don't like doing. Oh, there it happened. I don't like doing that. But there are some opportunities where you can look at this on a shorter time frame and still try and make a couple of moves on its way back down, like this right here. Okay, this would be considered a shorter term posture, but still it's still a good opportunity. Whoa. There we go. Okay. Got this, it's kind of a head and shoulders pattern, but mostly what I'm seeing is this starting to top out. We're looking at the Australian dollar. We looked at the dollar, didn't we? We already looked at that. We're a little bit more bullish on this than we normally would be. Starting to rise up a little bit. It could have some room because I'm thinking that the market might have had its run. It might have already enjoyed a nice run up. It might be time to sell off a little bit. You know, that is a possibility that I want to take advantage of. But I don't want to trade stocks doing that. I don't want to sell anything, but I'll certainly trade some currency pairs. So I'm going to trade this Aussie dollar, and this is going to be a live trade, but I'm going to walk us through it really quick. So I'm looking at this, I'm seeing it top out. It can't seem to get above this level. So I'm going to draw a little trend line here. This is our neck. Price broke below our neck. Come on. And it's trading below it now. What I want to do is I want to see if price will come back above here, stay below, and continue down. Maybe to hit this pivot point right here, or to come back to these previous lows. I don't expect it to run down quickly, but I think I can at least get, let's measure this. I think I can at least get a 50 pip movement. Okay. Now I've mentioned these names before. Let's break that down for just a moment. And again, I apologize for those that have traded currencies in the past, but I think this is a great opportunity to revisit. So 1 pip equals, on this pair, 0.0001. Okay, so price is currently trading at, over in this red area right here, now it's green, but that's the current price. Current price is 0.7228. So 1 pip is equal to this amount, the 8, right? So that 50 pip move from there to there is really only that those 2 decimal places. That's it, right? 50 pips to go from there to there. That's not a lot. Now, what does 50 pips equal? 50 pips equals contract. And the reason I didn't say a numerical value to the contract is because what contracts are we trading? Well, in currency trading, they use the term contract, just like they do in options trading, except one contract in currency trading can represent $10,000 in a mini. So in currency trading or foreign exchange trading, they give you the opportunity to leverage an incredible amount of money. So you put in a little, they'll let you trade a lot. Okay? So there's a lot of high risk and a lot of high reward. But that doesn't mean you're exposed to losing that much. That's why we have stop losses. That's why we have rules. That's why we have systems. That's why we have all these things. But to just quickly understand this, 1 mini micro, so 1 mini contract equals 1,000, okay? And what that means is that 0.0001, that pip is equal to 10 cents. Okay? So that's a mini contract. And that's important to know because we want to dial it down to the T when we're thinking about risk and reward. Because if I have $100,000 and I don't want to risk more than $1 of my account, and I know that I'm going to risk, say, 100 pips on a trade, then that means I can risk up to $1,000, right? Well, what if it's 65 pips? Well, then I might be only risk, then I can risk more than, then I can risk more than one contract, right? So what I'm trying to say is that you need to dial it down, which is why we use certain brokers that let you work with mini contracts and micro contracts and mini contracts. So, sorry, this is a micro. Now, okay, stay with me here. So 1 micro equals 1,000, which is equal to 0.001, 1 pip. 1 pip equals 10 cents. Sorry, it doesn't equal. But so that means that 1 pip equals 10 cents. So that's a micro. 1 mini, okay, 1 mini contract equals 10,000. Okay, so 1 pip is equal to $1. And then finally, there are standard contracts, which is what the institutions will be using. Actually, they use even bigger things than that. But anyways, equals 100,000 units, which is equal to 1 pip equals $10. Okay, you guys with me? Any questions? So it's just numbers here. All we have to focus on is micro means 10 cents, mini means $1, standard means $10. Let's go ahead and get rid of that standard because most of the time we're going to be working in the mini contract area. Okay, so looking at this trade, and it depends. If you're working with $1 million, you're in the standard contract area. But if you're working with under $1 million, you're probably most of the time going to be in the mini contract area, most of the time. But you could be in a standard. It depends. But it's all about risk versus reward. So now that we know what that means, we can have an idea of how to determine how many contracts we would buy or sell. So I want to sell this pair, this currency pair. All right. And I'm looking at entering around, just roughly around 72.45, roughly. So I need the price to come back up. If it doesn't come back up, that's okay. I'm not going to cry over it. But I saw it break below this. I'm getting confirmation. Now I want it to come back up and then get me in. So I got confirmation that it broke below this, which is bearish, which is good because I want to see this go lower. Let's see if it can kick us in. Get me in, and then hopefully we're looking for something like this, guys. We're looking for it to go down, which it did. We want it to come back up and then make its way down. That's what we want to see happen here. So if I'm wrong, if it comes back up and then breaks through and back all the way up, I need to be prepared for that. So I might put my stop around these highs right here. Let's make a line here. Okay. Price clearly had a problem coming back up here, didn't it? It hit here and there and there and so on and so forth. Don't get too caught up in this. This is what we call technical analysis, charting. This is the complex side of trading currencies. You don't do a lot of charting in options. You can, for sure. There's definitely an aspect to it. But there are some strategies and options where it doesn't even matter what kind of pattern you see. You just need to look at it and say, I just need you to, some stocks, you just need them to do this, right? So obviously there's no patterns in play. Well, in currencies, we've seen a pattern here. It had a hard time coming up, couldn't do it again, leveled off in this area. Now it's breaking below. Here's a pivot point. This is an area where the market has deemed a multiple times of support. So this is a good area of to call a target. So we might say, hey, price might come back down here. And it actually coincides with some support areas here. This is what it's made up of. Support area, right? Resistance here, right? This is areas where price is stalled out. So that might be my area where I say, this is my target. So here's my stop loss. Whoa. You know what? Let's get my annotation tool here. Stop loss. Boom. And take profit. Okay. So now I'm going to put a sell limit right around this area. So I'm going to measure this. I'm going to say from, if this is my sell limit, let's just say 72.50 to make numbers easy on me. From here to there. Okay, what does that say right there? Let's move this so you guys can, oh. Let's do that again. Move this right here. What does that say right there? It says 35, right? 0.0035. What does that mean? That means 35 pips, right? You guys still with me? Yes, no, maybe so. Come on, chat in. I want to make sure you guys get this. Okay. Okay, got one. Thanks, Katie. Thanks, David. Okay, good. We're still on the same page here. Okay, so this is 35 pip stop loss. All right, so if we can get price to come back up to here, we're looking at a 62 pip target, roughly. But we're probably going to get in a little lower than that. But anyways, just for teaching purposes. But this is going to be a live trade. I'll put the actual orders out later. Okay, so if we have a 35 pip stop, so 35 stop. Okay, that's equal to one mini equals $1, right? So that means that this, my stop, if I'm wrong, I'll lose $35. Okay, so the most I'll be risking on this trade with one contract is $35. That's the most. If it comes back above here, I'm out. I'm no longer interested in this trade because the trend has changed directions. It's no longer bearish. So we don't want to be in this anymore. Our posture was bearish. We wanted to see it come down here. It didn't do that. It came back up. We'll take a $35 loss, right, for one mini contract. But remember, we want to take what our account value is and risk to the appropriate size, right? So let's just make numbers easy. If I have $10,000 and I want to risk no more than 1%. Oh, thank you. And I want to risk no more than 1%. How much can I risk on this trade? Anybody? Thanks, David. Perfect. $100. So our stop loss is $35, right? So how many contracts can I buy? Roughly 3 contracts, exactly 2.8. But I want to be precise, guys. That's why I went through that whole demonstration, a micro. You can do micros. So when we're putting in a order contract, whoa, that doesn't look very good, does it? This is our trading platform, right? Okay, so if we want to put in an order contract, we'd go to here, we'd go to our stop loss, we put in all the numbers. Well, it just doesn't happen to be on there right now, and I don't know where it is, but we put it to our order limit, all that stuff, right? This is where we do it. 2.8. I can get very precise here, which is what I want. So I don't have to trade 3 contracts, because guess what? If I'm wrong, I'm not risking 1%. I'm risking more than 1% if I do 3 contracts. So I'm going to do exactly how much I can risk if I only want to risk 2 contracts, which is 0.28. So that's 2 mini contracts and 8 micros. Okay. So let's go back to here. All right. So I've got 2.8 mini contracts. 2.8, right? Minis. Now this is going to be an actual trade we're looking for. We need to see price do this and then that. Right now, you guys, if price continues to go like this, we're not going to trade this anymore. The trade is unvalidated. It didn't come back to what we were looking for. We wanted this to come back to this area and then go down. It didn't. It went down. If it continues to go down, we missed it. No big deal. Not important. We want it to come back up. If it does, great. If it doesn't, no worries. Now, so we're risking exactly $100 by doing 2.8 mini contracts, right? So if we're going to make, let's just say 50 pips on 2.8 contracts, how much is that? We're going to make $140 on this, right? So that's how you go through this. This is the value of currencies when you're thinking about when you're not sure what to do with stocks, is we can trade this in any direction, anytime. It's always moving. It loves volatility. This is an instrument, you guys, if you have a band, you've got a rock band, you've got your bass and you've got your keyboard, right? In the band, your bass and your keyboard, they create the consistent flow in any beat. You got to have your bass and your keyboard, right? That creates the flow. Without it, you don't have that flow, right? That's the stock market. But when the stock market's going crazy, you can use your guitar and your drums. That's going to be your currency. I don't know if that's a good example or not, but anyways, that makes sense to me. So you have to think about how you're going to trade these instruments when one's not working for you. Stocks and options are volatile right now. They're a little crazy. So I'm looking at forex. We can make a lot of money on many different scenarios. This is one pair. There are roughly 30 other pairs. A trade that I put out today was the CAD Chef. This is a longer term trade. So I'm expecting this to do some different things here. But there we go. This is a very long-term trade. I'm expecting this to do a lot. There we go. I'm expecting this to go here and then here and then here. I don't know what it's going to do, but I'm not anticipating that this thing is going to. I'm not anticipating this thing is going to run up to its target in the next couple of days, or even the next week. I imagine it might take a few weeks, and that's okay with me. This is one of those trades that I'm happy to use in my portfolio. Okay. Thanks, David. So this is the CAD Chef. Now, I really want to bring this up as an example very quickly. CAD Chef, Canadian, the Canadian dollar. Dave, my good friend David, he's Canadian. My father's Canadian. Gotta love Canada, people. Okay, Canada is a great currency to trade because it reflects on what the United States is doing and what Europe's doing kind of at the same time in terms of currencies and how to watch them. So it's not crazy volatile. It's a great pair to trade or currency. And then when you tie it in with the chef, this can be a very good pair to watch. Now, with currencies, I will literally trade anything that presents itself a good opportunity. But I like this pair for an example because of those two factors. Okay, the Swiss franc is a safe haven, and the Canadian dollar is less volatile than, say, the yen, the euro, the pound, the dollar, etc. Okay, so this pair overall is not going to be a fast-moving one, and that's why we like it. Now, back to that example, can someone please tell me, so I know that you guys got it, what is the value to purchase 1 Canadian dollar? CHF. We look at this number right here, so that means what? That means somebody, anybody. That means that it costs 69.48, roughly 69 cents to buy 1 Canadian dollar, right? Okay, so the Swiss franc is much more valuable than the Canadian dollar, right? If we were to go to the USD CAD, USD CAD, we lose 31 cents to buy a US dollar. Canadians hated this. I'm sure David could attest to this. Hated this when the market does this. When it was back at 46 cents, right? That is not good for a Canadian because they lose 46 cents to every loonie that they have, right? To every Canadian dollar. Not good. So I just want to make sure you guys understand that. Okay, so anyways, this is a live trade that we're going to be trading. We're going to be putting the order on. We might miss it. That's okay. I'm not worried about it. This is a shorter term trade. This could actually fill and be done by tomorrow. Hard to say, but shorter term trade. Yes, exactly. Exactly. Thanks, David. So shorter term trade. We're looking for this to hit this pivot point. This is going to be a live trade. So you guys, I could talk on and on and on about forex. It is my passion. I've been doing it for 13 years. I love it. But I've been going for a little over an hour now. So I'm going to call this a good stopping point. But there's so much more to talk about currency trading and using that as an instrument when times are too volatile in the stock market. We're still going to be trading stocks, absolutely. But you guys, this is something that you must be doing in your portfolio 100%. I am here to help you guys make money. If you guys are not making money, then you know that I'm not doing my job. So you have to be making sure that you're taking these trades. I post trades in the chat multiple times a week. We only meet Mondays and Thursdays. So you guys, as members, as you know, paying for this service, I want to make sure that you guys are taking every opportunity of the trades that I post. Okay. So if you ever have questions, this is a good breakdown of how this works. This is the platform that we are using. I always post little screenshots of how we do this. Okay. And I always post what I'm looking at. So if you follow along with this, I tell you how to get in, how to get out, how to manage it. Okay. I'm telling you right now, if you're following these trades, if you've been following the trades, you should have already made money. So that's the important thing about this. So make sure that you're following this. There's going to be so much more to come. I'm telling you guys, by the end of this month, there will be a lot of trading opportunities, a lot of money to be made in the currency market. and in the options stock and options market. Okay, so let's not miss these. Does anyone else have any other questions? And I really want to thank you guys for coming, taking the time out of your evening. I really appreciate it. And you know, I spend a lot of time creating these charts and looking for opportunities. I do this for myself and I do it for you guys. And I take the time to demonstrate, illustrate, and make sure that you clearly understand. So please, you know, take advantage of these opportunities. That's why you're here. And if there's anything I can help you do that you're not getting, just DM me. Okay. So take advantage of the, I won't, a broken record, totally, don't care. Take advantage of these opportunities. You're here to make money. I'm here to help you make money. Okay. So anybody have any other questions? Anything you want to look at? Any stocks? I didn't talk about stocks at all because I really wanted to hone in on currencies because there's so much money to be made on the currency market in the coming days. So much. Anybody? Bueller. And if not, thank you guys. I will. Great. I'm glad, David. And you know, this is a fun market to get into. And don't be intimidated by any things I showed you. It takes time to get into it. And you know, just like I said, take your time getting into this. I'm very excited about the opportunities in front of us. And again, thank you so much for being here, you guys. Have a wonderful weekend. I will see you. Oh, excellent. Great, Ken. Yeah, so currencies, and it's a good market to get into. I'm sure this was a lot as your first introduction. And if there's some terminology that I said that you didn't quite get, I posted some of these sessions. So feel free to jump on and rewatch those, and just keep coming. Keep coming to these sessions. I break down all of the things that I'm talking about, and sometimes I go a little fast, but we always circle back to it. So just be consistent, and the currency market will definitely be paying us out, guys. So thanks, guys, for coming. Have a great weekend, and I will see you on Monday. Okay, take care, guys. Happy trading.